Hi, I want to start off by asking everybody a question I'm sure many of you will know the answer to. What is the one guarantee we will all face once we graduate and get jobs? If you're thinking pay taxes, you're absolutely correct. That's what I'm here to talk to you about. According to the IRS, 150 million tax returns were filed in 2007, which equated to about $325 billion in tax refunds. Now, that's a lot of people paying taxes, and there's a lot of people not knowing how they get to those taxes. I think it's a really big topic. I think it's a great time, not only because we are in tax season, but also because there was a new tax law that was enacted in 2017 called the Tax Cut and Jobs Act. The main purpose of this tax code was not only to simplify the tax process, but to also lower the tax burdens on the taxpayers in hopes that it stimulates the economy. My name is Technical.Humphreys. I'm an accounting major here at Idaho State. I did take taxation last semester, and it did. Once I learned, some of the things that they taught, it helps when you go back and watch news programs or read news articles, because then you can actually understand what they're talking about instead of taking on somebody else's opinion as being the truth. So, and that's what my hope is that not only will you understand the terminology more and understand how this new tax law can benefit you, but I'm hoping that as future taxpayers, you'll have the information to make better decisions so that you can improve your after-tax wealth. And that's basically what taxation is all about, is making sure you pay the least amount of taxes. So what I first want to do is talk to you about what taxable income is and define it for you, also show you how it is calculated. So taxable income is the portion of your income that is taxed. So how they determine what your taxable income is not is the total amount of money that you make throughout the year. That's a huge misconception I hear all the time. Your taxable income is going to be less every single time. So how they calculate taxable income is they take your gross income, or your gross income, they minus your 4 AGI deductions, and that gives you your AGI. So your AGI is the adjusted gross income. Now, from your adjusted gross income, they subtract your from AGI deductions, and that gives you your tax liability. Your from AGI deductions is going to be the greater of the itemized deductions or the standard deductions, which I'm going to talk about and explain and elaborate on those here in a little bit. So, the next slide that I have is the last part of that individual tax formula. It shows the process of tax liability to your taxable income to your tax liability. And how it breaks down is it's your taxable income minus credits, minus prepayments, and then the total of that is going to be either your taxes that you owe or the refund that you're going to get back. And how they determine that is if it's a negative, you're getting money back. If it's a positive, you owe taxes. So, all right, so since we do understand the terminology a little bit better, what I do want to do is just tell you briefly some of the changes that you've seen in this new tax law. One of the major changes is that in all 7 tax brackets, Donald Trump has decreased the tax rate. And not only that, is that he has increased the threshold to remain in that tax break. For instance, in 2007, if you're making about $40,000 a year, you would get your tax burden would be about $5,700. In the 2018 year, in that same $40,000 range, you're going to be paying about $4,700 as a tax liability, which is about $1,000 less. The next change that we see is he almost doubled the standard deduction. So for married filing jointly, the old standard deduction was around $12,000. It is now $24,000, which is basically twice as much. For single people, it went from $6,000 to $12,000, and from head of household to about $9,000 to $18,000. Now, why this is so important is that your standard deduction is what makes your taxable income less. So, would you rather have $12,000 in taxable income, or would you or $12,000 in deductions, or would you rather have $24,000 in deductions? And obviously you don't even have to answer that. So now, what did occur? Another change that did happen is that the child tax credit, the personal exemptions of $4,050 that you used to be able to claim for yourself, your spouse, and all your kids, he did take that away. But even with that taken away, the fact that the standard deduction has been doubled offsets all that. It makes it's okay. And also the fact that the child tax credit was raised from $1,000 to $2,000 help offset some of that as well. So, I talked to you guys about taxable income, tax liability. I showed you how to calculate all that stuff. I briefly talked to you guys about the new tax laws and what to expect. The purpose of this is that hopefully the next time you're hearing something on the news, or maybe you're reading something, that you might have a little bit more understanding, and hopefully this helps you make better decisions in the future. So thank you so much. Have a wonderful night.